Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, but starting this video with a volume profile over here where you can see the value area low, point of control, and the value area high, as well as this white box on the chart, which is a support resistance area, support turned into resistance, and then over here, third time of asking, price actually managed to now cross the resistance, move above, and also now enter this value area, which is important as that then increases probabilities to move to the point of control at 38.7k, as well as the value area high at 49.5k. Now, quite often when entering a value area, price does like to come back and retest the value area low, as well as then this support resistance area. And on the weekly time frame, which is the time frame I'm at now, you definitely want to see candles closing above. A wick below is not a problem, but you don't really want to see any candles closing here, as then you would enter this range again and the probabilities are higher for a move towards the downside. If we then zoom in to the bullish structures on the 12-hour over here, then we are looking at this running flat, ABC running flat. Now, most commonly a wave C takes the low of wave A in an expanding flat, but that is not the case. A running flat is very rare. And also a running flat most commonly actually goes to the golden pocket and then returns over there, but this one went all the way down to around the 886, taken from the low to the high of this wave B. You can put wave A over here, which then means that wave C did end below the low of wave A, but then you have a flat wave B in a bigger flat structure, which is also incredibly rare. So both of these scenarios are not great regarding the probabilities, but that is why also here more locally, we kept a close eye the past week on local price action to determine the probabilities, where constantly the probabilities were higher for continuation to the upside, and now we had this push. If we then look at this move towards the upside from an Elliott Wave perspective, then over here we have a double 1-2 scenario. So in this scenario, we then have wave 1-2, another 1-2 for continuation to the upside, and then a wave 3. Now you can see that this wave 3 is already quite extended, hitting the third over here Fibonacci level, taken from the low to the high of 1 to the low of wave 2, the trend-based Fib, which is a target for a wave 3. And eventually you're going to be looking for a wave 4, because you eventually want a wave 4 and another high to be made for a wave 5. And that is why I think it's also a good idea to have these Fibs on your chart, taken from the low of 2 to the high that we have at the moment. And if price makes higher highs, then you just continue moving the Fib pool from the low to the new highs, because as long as you don't get at least a kind of like similar range compared to what we had of this wave 2, which was about 9 days, then the highest probability is that we're not yet in a wave 4. Usually a wave 4 is also longer in time than a wave 2. So you can expect at least 7 to like 12 days of ranging for this wave 4. And if it's not really the case and it's a shorter range, we can expect that wave 3 might not yet be in. Now the invalidation at the moment is if price would move towards the downside, hits this level here at 29.8k, would invalidate the blue wave 4, increasing probabilities we're moving to the downside. Now, another scenario that I still have in the back of my mind is this somehow being still some sort of a diagonal structure, where we have a diagonal for wave 1, then a 2, and eventually continuation to the upside in a wave 3. Doesn't really change too much. It's just that eventually after 3, you still expect a 4 and a 5. So that's something to continue to look out for. It's just that the double 1-2, the second one and the second 2 are actually longer in price and time compared to the higher degree 1 and 2, which is not really what you like to see in a double 1-2 scenario. And also because of the probabilities of a running flat and the double 1-2 maybe not too great, we cannot forget about the bearish Elliott Wave scenarios. Yes, we had a nice push to the upside. It looks pushy, it looks great, right? But we always have to keep in mind potential bearish Elliott Wave scenarios as well. And more locally, what happens more locally will decide the probabilities of taking the highs or moving down to the lows. And that's of course why I update 3 times a day. Now, in this particular scenario, we are looking for still a move to the downside in either an ABC or a WXY. Most common target for a wave B as well as a wave X that takes the high of W is the 1.236 to the 1.38 pulled from the high to the low, which as you can see at the moment is very, very nicely respected. Now, the 1.618 is a less common target for B or X, but still a target. And on top of the 1.618, we also have this resistance box between 35.9 and 36.2K. So we do have some additional resistance at the 1.618 here at 36.1K. In the bearish scenario, we then expect price to move to the downside, and that is then also the biggest difference between the bearish scenario and the bullish scenario. Of course, in the bearish scenario, you want to make a high, but then you don't want to have a multi-day range and continue to the upside. No, instead, you want to move down, invalidate the bullish scenario, and continue towards the downside. That is the biggest difference with what you see over here, where you want to see a bigger range and move up. If you don't get a bigger range, but instead you move down and hit the invalidation, probabilities are higher, you're still in the bearish scenario, and you're gonna take the double bottom over here, right? Low number 1, low number 2. Bybit also has a big wick here still, which is not filled. Most commonly, based on probabilities, those type of wicks do fill. It's quite rare not to, but in this scenario, of course, it doesn't have to, right? It can just escape. But in the bearish scenario, you would move down and move towards this area here, which is then between 23.8K and 18.6K. And based on a move to the downside, you're still going to be in bullish market structure, as we then still expect a bigger move to the upside, and then this to be a first structure, second, and then you're going to have a third move. Now, if we then zoom in to X or B, there is two scenarios to keep in mind. The first one here is an ABC scenario where wave A starts with a diagonal, wave B retraces to the 382, and then you have a wave C to the upside where you can have a 1, 2, 3, maybe now working on 4, 5, before then a move to the downside. And also here, the 1.618 is sitting at 36.3K. So this area, again, very, very important indeed, where we have resistance. Currently, we are at resistance, as you can see, but the next 35.9, 36.2, and just above 36.7 to 37K. So we're not out of the danger zone just yet. In this scenario, you then expect, preferably based on what I see here, 1, 2, 3, 4, 5, and then a move down. And in a WXY scenario that you see over here, we are then looking for a three-wave structure in W, which in my opinion this scenario is a bit of an alternative for my feelings. We have an ABC flat over here with then a diagonal as a flat. Then you have wave X either here or this is your wave X, for then a wave Y to the upside. And a wave Y has to be a three-wave structure, not a five-wave structure. And it's quite difficult, of course, to count a three-wave structure in here at the moment. That's why potentially the ABC for me feels better, has a higher probability. We're also just above the most common target for Y, the 1.618, sitting at 35.7K. If we then zoom in and we go to the lower time frames over here, then this is quite interesting. Price moved to the downside just now, and it definitely had a little bit of a volume, as you can see. Now, in this scenario, the volume to the downside is important, because if you get a high volume move to the downside, as you see here, preferably in a bearish scenario, you're then looking for this to be somehow like 1, 2, high volume move is then a wave 3, then you're going to be looking for a 4, before then a 5 to the downside. If, however, this move retraces too high, probabilities decrease of this being an impulse to the downside and increase that the low over here can be a potential C, as wave Cs do like to end on high volume. Now, what you can see over here is the red line that says invalidation, and that is basically the invalidation for a potential more bearish impulsive structure to the downside, where over here I pulled a fib. So if we look at this being bearish, then you could have a 1, 2, and then another, so 1, 2, 1, 2, 3, then you have 4, 5, because preferably this is your wave 3. So that leads to either this being a 1, 2, 3 or a 1, 2, 1, 2, 3. High volume in the lows, preferably you didn't see a 4 and a 5. If you take a fib from this high to the low, you can see the golden pocket is hit. If I move it up to this high, you can see the golden pocket is hit, and even to the high of B, the golden pocket is hit. And for a wave 4, hitting the golden pocket is incredibly rare and actually kind of like invalidates a wave 4, meaning the probabilities are at the moment lower, that you will move all the way to the downside. Of course, everything can go in waves, and this can only be your first structure, second structure, third structure, and then continue, right? But the probabilities based on this at the moment are higher. That price will at least take this high one more time, and then we have to take it from there, right? Not thinking too large, we take it level by level, step by step, and over here locally, price moved down into a 1 hour order block. If I can show you over here, so the 1 hour order block was hit over here inside the most common wave C target area, which was taken from the high of A to the low 3 wave in B. So then you take it from the high to the low of A to the high of B. This is your most common target area, exactly on the golden pocket, taken from the low to the high over here as well. Very nice indeed for support. Higher probability at the moment, you're at least gonna see this high once more. It's all probabilities, of course. Then if we look at the CVD divergences, we did have bearish CVD over here. However, what is interesting is that you can see we have a higher high here on my chart, but on the AGGR chart, a lower high. This is the CVD chart. And that is the reason why I don't really enjoy this bearish CVD divergence, or at least I didn't really trust it. So yeah, that is at least something to notice, that if you see a difference in the actual chart, at least I use Coinbase and the AGGR chart, based on experience, probabilities, there's less of a probability it will play out, but it did, because price took the low, which is nice. But it's quite interesting. There's no confluence in the highs, and currently between this low over here and the higher low in price, we have bullish CVD divergences, because as you can see here, higher low in price, but you can see clearly on yellow over here, lower low on the CVD, and also on blue, lower low on the CVD. Now preferably, however, price builds bullish CVDs on the right side of this low. So you get a bit of a move, you go down, bullish CVD, and then move up. Those are most trustworthy in comparison to a pivot on the left and the right of the most recent high. So that's a little bit of a nugget for you. If we then look at the probabilities of the different scenarios, then I have to zoom out and find my probabilities box somewhere. There we go. So on the medium time frame and the low time frame, currently the probabilities are higher for price to still move towards the upside. As long as there's no clear bearish signs, it doesn't really make sense, of course, to look for the downside yet. It's just important to know, and also to risk manage your trades. No financial advice here, but it's good to know that we are not yet out of the danger zone for bearish scenarios, right? That's very, very important. So over here you can read medium time frame, low time frame at the moment is bullish, as long as local price action doesn't show any sign of weakness, and we can still have a potential retest of the value area low, which is sitting over here, as you can see, for then a move to the upside to the point of control. But as mentioned, you don't want to dip too deep, right? And on the micro at the moment, having at least the highs taken currently has a higher probability based on what I explained at the moment, with the highest volume here on the 50-minute sitting in the low, and then a wave 4 retracing too high for a wave 4. Very, very low probability. Of course, it can continue ranging, but the probabilities are at the moment higher to take that high one more time. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.